So how does all this boil down for you, the investor? Devna Vora has spent the entire day in the rain and has witnessed all the pain on Dalal Street today, and now brings us a complete account of exactly how the sentiment is.
Colourful umbrellas on Dalal Street, but pale expressions on the investors as they see their wealth slide on the screen at the Bombay Stock Exchange. The scary start on Dalal Street and a minute-by-minute change visible here on the profit screen brought home the reality of a serious correction. If one had invested 1 lakh rupees in the Sensex on Friday, he would have gotten poorer by 3,250 rupees or 3.25% at the end of today. And if one had invested 1 lakh rupees in the Sensex at the start of 2008, he would have gotten poorer by 25,000 rupees or 25% in just over 5 months. And if an investor had put his money into one of the 28 IPOs this year, he would have more than likely lost money, as only 8 IPOs are trading above issue price.
Now, since I have invested in large cap companies, I have lost to the same extent where Sensex has gone down. So it might be in the range of 20% to 25%. I would probably wait for a couple of weeks more, and if I see that there is no stability in the market, then I would probably want to exit it.
If mutual funds have been favorites with small investors today, that trust was also shaken as investors fear panic selling to redeem their investments. All this comes at a time when the global turmoil is intrinsically linked to the slide in India, and each of these Dalal Street investors is trying to make sense of it.
Basically, I think the global slowdown, US was under a recession and the rising crude prices, and since the global markets are not doing that great, I feel that Indian markets are reacting to them.
The good news is that young investors are keen on putting money into the Indian equity markets, but the bad news is many have got their fingers burnt. So we will be in for some uncertain times ahead, and so will your portfolios. In Mumbai, Devna Vora for NDTV.